annual general meeting. I'd like to express a special welcome to our shareholders. It's good to see so many of you here, and we have many online as well. We are pleased to see some of you participating in today's meeting. Thank you very much for having joined us. This afternoon, we will share with you the company's financial performance for financial year 2023, and our shareholders will vote on matters related to the business of the company. Just very briefly, our CEO is going to provide you with a much more comprehensive overview of performance, but last year was, for GraceKennedy, another transformative year, characterized by significant achievements and advances in our strategy. We thank all of you as shareholders for your unwavering support, which is instrumental to driving for success. In 2023, we surpassed the major milestone of generating $1 billion in revenues, which demonstrates GraceKennedy's unwavering dedication to excellence and our commitment to delivering value to our stakeholders. This year, GraceKennedy's theme is building a culture of excellence through great people. And I can say with confidence that we have some really great people working in our company. The hard-working GraceKennedy team is well positioned to achieve our 2030 vision for sustainable growth and global expansion. On behalf of the GraceKennedy Board of Directors, I take this opportunity to express our sincere appreciation to the GraceKennedy team, to our customers, business partners, shareholders, and the communities that we serve around the world. Before we move on to the business of this afternoon's meeting, let me take a moment to reflect on our achievements and to give thanks. We do so this year with a selection from a few members of our GraceKennedy choir.
I love you, Lord, for your mercy never fails me. All my days I've been held in your hands. From the moment that I wake up until I lay my head, oh, I will sing of the goodness of God. All my life you have been faithful. All my life you have been so, so good. With every breath that I am able, I will sing of the goodness of God. I love your voice. I love your voice. You have led me through the fire. In darkest nights, you are close like no other. I've known you as a father. I've known you as a father. I've known you as a friend. I've known you as a friend. And I have lived in the goodness of God. All my life, you have been faithful. of the goodness of God. All my life you have been faithful. All my life you have been so, so good. With every breath that I am able, I will sing of the goodness of God. I will sing of the goodness of God. I will sing of the goodness of God.
Thank you very much, Voices of Grace. That was very delightful. Mrs. Gail Moss Solomon, General Counsel and Chief Corporate Secretary of GraceKennedy Limited, will perform the function of Corporate Secretary for today's meeting. Will the Secretary please advise if a quorum is present?
Yes, I can confirm that the quorum of 3, as required in our articles, is in fact present here today.
Thank you. Mrs. Moss Solomon, will you now please take us through the protocols for today's meeting?
Thank you, Chairman. Good afternoon, everyone. Shareholders and proxies who are here in person should have all received a paddle. The paddle should be raised for the following reasons: to move or second a motion, to indicate your vote on each resolution, or to indicate that you wish to ask a question. When you registered for today's meeting, whether online or in person, you would have either identified yourself as a shareholder or a non-shareholder. As is customary, only shareholders or their duly appointed proxies are permitted to move and second motions and to vote on resolutions. Non-shareholders are not permitted to move or second motions or vote, but non-shareholders are, of course, encouraged to ask questions either in person or via email to gkinvestor@gkco.com. Shareholders online, please vote on resolutions by clicking the for or against button, which will appear on your screen. Shareholders who are here in person, please raise your paddles to vote. Shareholders online will have 15 seconds to cast their vote, after which the results for each resolution will be announced. Half an hour has been allotted for the question and answer segment of the meeting. During the Q&A, we will take the questions in the order that they have been received. We will first answer any questions we received via email prior to the meeting. Then we will take questions from those who are here in person. Finally, we will respond to any questions which we received via email during the meeting. We encourage you to be brief when asking your questions so that others may also be given the opportunity to ask questions. And every effort will be made to address all questions this afternoon, time permitting. Thank you to everyone who has already submitted questions. For those participating online, note that there is still time to submit your questions via email. Please send them to gkinvestor@gkco.com. For online participants, please also note that to avoid undue disruption, your microphones have been disabled. We invite you to use the chat box at the bottom of your screen to interact with the other virtual participants and to make comments. Please note, however, that questions should not be submitted using the chat. Only questions sent via email to gkinvestor@gkco.com will be addressed during the Q&A segment. For shareholders online, in the event you experience any technical challenges during today's meeting, you may reach out to our team for assistance by calling 932-3160 or send an email to gkinvestor@gkco.com. In the event that there is an emergency which requires us to leave the building, please follow the instructions of the ushers who will direct you to the nearest exit. Thank you so much for complying with these protocols, and we look forward to a successful meeting. One final note, today's AGM is being live streamed and recorded to enhance shareholder participation. The recording will be uploaded to GK's YouTube channel. GraceKennedy is committed to protecting your personal information. For further details on how to protect your personal information, you may access a copy of our privacy notice at www.gracekennedy.com, or you may send us an email at gkinvestor@gkco.com.
Thank you very much, Mrs. Moss Solomon. The notice of today's AGM was published in newspapers in Jamaica and Trinidad and Tobago, and was also posted on Grace Kennedy's website and the websites of the Jamaica Stock Exchange and the Trinidad and Tobago Stock Exchange. The AGM notice also appears in our 2023 annual report. The notice convening the meeting was published within a statutory period of 21 days, and copies are available here today. With your permission, I will take the notice as read. Thank you, shareholders. We're very pleased to have the directors of Grace Kennedy Limited present here with us this afternoon. Mr. Don Webby, Group Chief Executive Officer. Mr. Andrew Masado, Group Chief Financial Officer. Dr. Indiana Mintakoy. Mrs. Gina Phillips-Black, who chairs the Corporate Governance and Nomination Committee. Mr. Peter Williams, Chair of the Audit Committee. Dr. Paris Loye Jr. and Mrs. Vanessa Rizzioli are both joining from the UK. Our Group CEO, Mr. Don Webby, will now present on the performance of your company for the year ended December 31, 2023. He'll be joined in this activity by our CFO, Mr. Andrew Masado. Don?
Good afternoon, everyone. Mr. Masada, I hope this thing works. So, as mentioned earlier by our by our chairman, our theme for 2024 is building a culture of excellence through great people. And you have heard me before. You can have the greatest strategic plan in place, but if you don't have great people supporting that plan, then the plan will not happen. And I'm proud to say that we have a great board of directors, and we have a great team in place at Grace Kennedy. So let me just formally introduce the team. These are our directors, our dynamic chairman, Professor Gordon Shirley. Give him a round of applause for me, please. And you'd see our directors in the front row here. Stand directors, man, and show up yourself. And the team that I'm so proud to lead, Grace Burnett, who is all over the Observer today. Double page, Grace. Can you stand and everybody knows you after the Observer. And my executive team, can you stand at once? Frank, Stephen, Annette, Andrea. My hard-working executive team that I harass every Monday morning for their results. So in looking at 2023, we have to give God thanks. It was a very rewarding year. We were recognized on a number of fronts. The first one being on Triple Crown has nothing to do with my hobby. But we won the 2002 Governor General Award for Excellence, the Corporate Governance Award. Is Douglas Arrain here? I haven't seen him for a little while, my mentor and friend. Douglas, can you stand up? Douglas is actually despite his young looks, he's a pioneer of corporate governance in GraceKennedy. And believe me, we have been through a journey. Douglas, good to see you again. Retirement is looking good on you. Maybe I should join you soon. And we're very proud that our subsidiary company, Keyinsurance, actually won the first runner-up award. So congratulations to all. And GK Capital Management. I remember Douglas many years ago showed me an E&Y report. No offense, PwC. That a company that has good corporate governance, their share value should be 20% up on others. And I'm still waiting for GraceKennedy's own, based on our stock market. We're very proud of our foundations. Caroline, I'm not sure if Caroline is here. We won the prestigious RGR Gleaner Honor Award in the category of science and technology. And our foundations are doing a fantastic job, and I'll expand on that. The Governor General Award for Medal of Honor. We also, and it's a Gail receiving on my behalf, Mrs. Masalman, the long-standing support to the Office of the Governor General, and we are very proud of that fact. So let us look at the financial highlights. We had a good year. We had a good year, as our chairman mentioned. We had set ourselves a target as an executive team that we want to be a $1 billion company by 2025. Well, guess what? We are a year ahead. So we achieved our target in 2023. Actually 2 years ahead. So our next target is that we want some more of that $1 billion flowing to the bottom line. Nevertheless, we are very proud. So if we look at our financial results, revenues of $155 billion. Andrew's going to get into the details. We're 9.5% up. And you can see that our profits are up, both PAT and both PBT were up. Very strong performance in all the divisions. Here's our usual slide. What you'll notice, and I always highlight this, Andrew, is this going to be working? Yep. Working. So you notice that inside Jamaica is 56%. There's really no change inside and outside Jamaica profit before tax or the revenue. Sorry, let me go back. Revenue 57.3% inside Jamaica and outside Jamaica. You'd see it's basically the same with some growth in the Caribbean. One thing that I always say every year to our shareholders is that we are growing both in Jamaica and outside of Jamaica. So because you see the percentage here relatively flat or relatively the same, we are seeing revenue growth in both Jamaica and outside of Jamaica. In terms of profitability, 56% inside Jamaica and 44% outside of Jamaica. Remember our long-term vision, which I'll touch on very shortly in my brief presentation, is that we want 70% inside Jamaica, 70% outside of Jamaica, and 30% inside Jamaica. And I want to emphasize the fact again that we expect Jamaica to be growing significantly, but because of the market size and the opportunities outside of Jamaica, that is why you see the ratio moving from 44 to 70. And here you see the group profit after tax, the growth of 10%. Q1 performance, I like to say our story continues. Let me go back. Okay, so we grew by 3.2 billion for the revenue for Q1, which is quite good, 8.3%. We're operating in a very difficult environment. It's a very difficult environment in the sense of, and you have heard it all, inflation is at 6%, interest rates at 7%, and I'm seeing some fixed instruments, Stephen Whittingham on 10%. So interest rates are relatively high. Inflation is still not under control. And I'm going to touch on that strategically during my presentation. So, colleagues, revenues up. We have seen growth across all segments in the GraceKennedy group for the Q1 of 2024. And I can tell you, based on our first quarter review and our latest estimate review, let me share with you that every quarter, the executive team and 20 of the senior executives of GraceKennedy will get together and we'll go through month by month for the rest of the year our projections. And our projections for revenue for 2024 is looking positive despite the challenging economic environment. In terms of profitability, 39.1 million up or 1.7% up. So we're moving in the right direction again. We did our latest estimate for 2024, and it is our expectation that we're going to meet our budget for 2024, and we're going to be surpassing our numbers for 2023, for 2024. It's all about execution, and we intend as an executive team to execute on our promises to our shareholders. Strategic execution. So we have 4 strategic drivers at GraceKennedy. Consumer centricity. We believe that if we get it right with our consumers, everything will fall in place. Our internal processes, I'm going to comment on that. Sustainable growth and innovation. Innovation in this world is going to be so important in terms of new products and services. And I'm going to be sharing with you some innovative strategies that we're going to be using for 2024 and beyond. And of course, a performance-driven culture. We hold ourselves as an executive team, and the board certainly holds us accountable in terms of performance. This is one that I am so pleased about. And Frank, congratulations for you and your team. We acquired Unibev. Unibev is a water supplier, the bottler, Tamara, for 876 and Catherine Speak, and we acquired it last year. Colleagues, let me share with you. We talk about execution. Since GraceKennedy acquired Unibev, actually took over the management in October, the production for Unibev is up 50%. You okay? So where is the photographer? Come take a picture of me with this, man. 876 and Catherine Speak, so they had summer, right? buy all 876 and all the catering speakers because it's not going to be short supply, I can assure you, with a 50% off. So Unibev is doing well. There's going to be a lot of innovation behind it. We're looking at putting in some blended fruits, Frank, June plum water, etc., etc., etc. But it's lovely. And in Portland, you are invited as our shareholders, as owners of the company, to go and look at our factory. It's really, really outstanding. And Catherine speak about 35%, and we're going to, I think it's public knowledge now that we're going to be owning 100% of Catherine Peak before the end of this year. Mergers and acquisition, key driver for the GraceKennedy group of companies. Think about it. 3 years ago, we were not in any markets for life insurance. As I stand here today, we're in 13 markets and we're going to be growing. This acquisition has been accretive, it's profitable, it's generating a lot of cash for us, and we are very proud of it. And we're going to be using technology, as you'll see from the next slide, to continue to grow our life insurance business with new products and services. Congrats, Stephen. So we have partnered with Haven Tech. Haven Tech is a subsidiary of Mass Mutual, one of the largest life insurance companies in the world. And the technology that we're going to be introduced is going to make it seamless, it's going to be very consumer-centric, and it's going to be very efficient. Scotia Protect, where Shaluk here? Shaluk, stand and be recognized as our general manager for UK General. Doing a fantastic job. And our partnership with Scotia Protect is doing extremely, extremely well. And in fact, Shaluk has said to me that Don is going to be doubling the revenue for 2024. So of course, Don is saying, well, you're not going to triple it. Money services, the remittance market has become very, very challenging, very, very competitive. I have been asked from a national point of view why remittance is going through such a hard time. And I have a simple answer because I speak to a lot of the members of the diaspora. And the truth is because of inflation again in the United States, the disposable income for our brothers and sisters in the United States of America is basically shrunk. So the ability for them to send funds home is limited. However, we are noticed Grace and Margaret are somewhat of a recovery for 2024, and we expect to take market share back. We have found a partnership with Courts, which we think is going to be working very well. We are now in 19 stores in Courts, and we have the opportunity to get up to 50 in Courts. So thank you, Courts, for partnering with the GraceKennedy group of companies. GK1, what a success story GK1 has been for the GraceKennedy group. As you read in the press last week, and we have now partnership with Link and Indiana. The launch and the performance of Link with GraceKennedy and with Western Union has been phenomenal for the first week, and we expect that growth to be going more. I don't want to steal Mr. Leach's thunder, but I'm sure that he's going to be speaking about it a lot in terms of the success of Link with the GraceKennedy group of companies. And GK1, we have invested $10 million US in there, in that product, and it's doing exceptionally well. Digital payments, as you'll see there, with Link. Mutual funds, we have 28 million under management now. And Stephen and others from, is Karim here? Karim Thompson here? Not here. We expect that to continue to grow. World Brands partnering with Nestle, our international partners again, doing phenomenally well. Revenue is growing significantly. And there is the products. Manufacturing, you know, I'm big on manufacturing. It's a staple. Manufacturing, I see it as a competitive advantage. And you'll see some of our products there that we are manufacturing. Energy, if you're going to compete in this world and be competitive, you have to ensure that your energy levels are competitive. And Frank, I'm extremely excited about Hilo. And Hilo is doing exceptionally well. In fact, Gina Phillips Black, we're going to have a Hilo in St. Thomas at the new Goodyear factory. Tourism. We believe that there's going to be significant opportunity for growth in tourism, and that is going to be a big focus for us in terms of supplying the tourist industry. SAP 4HANA, our new technology for our food business, is the heart of the food business. We've invested US $7.4 million, and it's going to be all on the operational efficiency. Employee engagement. And I made this comment a few years ago, and I'll make it again. There's a direct correlation between employment engagement and profitability. And 73.4% in terms of employee engagement is the highest it has ever been in the GraceKennedy group of companies. And I want to use this opportunity again and again and again to thank our employees, our hardworking, dedicated, loyal employees for their efforts. Without them, all the numbers that I've shown you would not be. And thank you, our employees, our team members, for your support to me personally and to the GraceKennedy group of companies. Shareholders highlights. Andrew, I'm going to ask you in your presentation to build on the share buyback program and our dividends. We Care, our foundations, I mentioned that before. Champs. We will continue to support Champs and investment in our youth, investment in our schools, and investment in Jamaica. Breaking news, we're going to be partnering with the Olympic team, the JOA. They'll be the official nutritionist. And the official bank is Ratcliffe here. Ratcliffe, you can stand, our president and CEO of First Global Bank. Environment, our dear company secretary, Graham Solomon, her baby ESG. In 2030 vision, action without vision is only passing the time. Vision without action is merely daydreaming. But vision with action can change the world. And we intend to do so. Our purpose and our vision. Here are our targets, very ambitious, but we believe that we can make them. And I can say to you, early days yet, starting blocks, but we are on target to meet these numbers here. Our core values. So I want to thank our GK team, customers, business partners, shareholders, and the communities we serve around the world. GraceKennedy is off to a great start for 2024, as I said before. Unwavering loyalty and commitment to all our stakeholders. The GK's vision is instrumental in driving our growth and setting us on a path towards continued success. And as I said before, colleagues, shareholders, the best is yet to come. Andrew? And we're going to get into the numbers.
Okay, good afternoon, everyone.
Good afternoon.
I'm just going to reinforce some of the highlights which were given earlier in Don's presentation, and just spotlight a few of the reasons why our performance was so good in 2023. So just starting off in terms of some of our key metrics for 2023, and you'll see all of them have are showing improvements with some green arrows showing those improvements. Starting off with revenue, we see that revenue is up by 9.5% or $13.4 billion, hitting that $1 billion US mark at 155 billion Jamaican dollars. In terms of profit before other income, this is a good measure of our performance in terms of operations, core operating performance, and you'll see that's up by 17.9%. Really what we're seeing is improved margins, looking at our efficiency, energy savings, and other projects to improve our efficiency. And so this is an area of focus that will be continuing into 2024. Also, profit before tax up 11% to $11.4 billion. What I'd say is, in addition to good performance by our subsidiaries, we're also seeing our associated companies like Canopy Insurance, Majesty or Patty Company in the US, and also Signia Globe or Merchant Bank in Barbados doing well as well. And then net profit attributable to shareholders. This really is the after-tax profits that are for the benefit of the shareholders directly after you take out the non-controlling interests for the minority shareholders. And so here we see that is up by 10.4%. And then our assets have exceeded the $200 billion mark, growing by $23 billion, or 11.9%. I get into a little bit more detail further along in the presentation, just to give you some highlights as to where that growth in assets is coming from. And then, most important to our shareholders, the shareholder equity is up by 8.9%, just shy of $80 billion. Now, having increased our shareholder equity, we do have the opportunity to pay out more dividends. And I know our shareholders are always focused on GraceKennedy's ability to consistently pay a dividend and show improvements. So what you'll notice is, since 2019, each year we have been growing our dividend payout. In 2023, we increased it by $150 million, or 7.5%. And come the 14th of June this year, we'll be paying a second interim dividend of 55 cents, which is a 10% increase over last year, June's dividend. So continue to show improved dividend payments. As Donald mentioned earlier, just want to give you some brief thoughts around the share buyback program that we launched last year, November. So you may ask, what's the significance of a share buyback program? One of the things that we have observed is that the GraceKennedy share price, we consider it to be undervalued, and we want to indicate this to the market. And so what you'll notice is that, when you take shares out of circulation, the remaining shares in the market will improve in value. You have less shares in the market, the company continues to improve its profitability. And with our 2030 goals, and also the things accompanying that, including our acquisitions that have been taking place and are planned, we see significant value in the GraceKennedy shares, and so we believe that the share buyback program will boost the share price. In addition to that, when you reduce the number of shares in circulation, you also improve your earnings per share. And earnings per share is a key metric in determining share price in the market. Also, another ratio that improves is your return on equity. And then the last one I'd mention is that it really shows the company has confidence because we have available cash to repurchase shares. We're not borrowing to repurchase. We have cash flow, strong cash flow, and the ability for us to enter into this arrangement. So that's kind of the update. This program will continue until November of this year. So you'll be seeing it, in the market if for shareholders if they're interested in this opportunity. Now I'm going to go on to the segment performance. Firstly, let's look at revenue. You'll notice that 3 of our 4 segments are showing improved revenue and slight decline for money services. Really, as Don mentioned, there is a challenge with remittances flowing into Jamaica and other territories, given the situation in the overseas markets for our customers. But you'll see strong growth in insurance, as we mentioned earlier. GK Life, we added to that portfolio, adding 5 new territories in 2023. And so that boosted the revenue for the insurance segment. Also, our general insurance companies, GK General and Key Insurance, did very well and increased their revenue in 2023. Banking and investments, or banking arm, has been doing very well. The loan portfolio is growing, and that has improved the revenue for the bank. And then on the food side, both our domestic and our international markets have been doing well. In Jamaica, as you heard earlier, we are expanding and have expanded the distribution of the Nestle portfolio by our subsidiary World Brand Services. Our other distribution companies, Consumer Brands and GFS, Grace Foods and Services, have also shown improvements. And then Hilo has been doing well. They opened a new store in late 2022 in Negril, and that has been doing well. And then internationally, both in the US and UK, we've seen growth in revenue. On the profit side, you'll see, again, for money services, flowing from the revenue challenges, the slight reduction for money services. Insurance, up by 55%. In addition to our general insurance and GK Life businesses, we also saw Canopy Insurance, which is the health and life insurance company here in Jamaica, a joint venture. We have seen them at their best performance since inception. So insurance is really doing well. On banking and investment, you see a decline there. I did mention that the banking section of our business is doing very well. On the investment side, though, as you have seen on the Jamaica Stock Exchange, there has been a challenge for equities generally in the market, and that would have affected our holdings, or equity holdings, in terms of unrealized losses for 2023. What we've seen, though, is in our food business, strong growth, 70% growth, almost $1 billion increase in profits for our food business. Then, just to touch briefly on the balance sheet, you'll see, again, our assets exceeding that $200 billion mark. Some of the highlights there, I'd say, is our cash and our investment securities have increased significantly. We've also seen increases in our customer loan portfolio at the bank. And then our intangible assets have grown. We had 3 acquisitions last year, Catherine's Peak in February. In March, we had our GK Life businesses. And then in October, we had Unibev. And all of those would have added intangible assets, things like the brands for Catherine's Peak, and then other insurance licenses as well. So intangible assets growing in 2023 significantly. And then you'll notice that for that blue line that speaks to our debt-to-equity ratio, it has been fairly stable over the years. And even in 2023, when we had a cash outflow of over $4 billion in order to do the acquisitions, you'll see that a fairly stable debt-equity ratio, which speaks to the strength, the financial strength of the GraceKennedy Group. Just looking at how we've utilized our funds, In addition to acquisitions, you'll notice that we have invested over $4 billion, $4.8 billion in additional assets in 2023. Don mentioned about manufacturing and or upgrading of the various factories. So our Nalcan factory or Grace Agro Processors have been showing, we've made additional investments. These plants do produce for the export market as well. Things like tropical rhythms and our Grace Jerk seasoning, those are exported. And so we're expanding for that growth in exports. In addition to that, we've been investing heavily in technology, both in terms of the hardware side, computer equipment, but also on the software side. We invested over $1 billion in 2023 for new softwares to enhance and improve both our internal efficiencies and the customer experience. One was mentioned earlier, the largest one in terms of our SAP platform, which really deals with the distribution side of the business in our food trading segment. The other thing I'll touch on very briefly is our Q1 results. So what you are seeing here is that for revenue, we grew by $3.2 billion to $42 billion for the first quarter, an 8% increase. You'll see good growth in terms of our segments, led by our food segment, growing by almost $3 billion. And then you also see on the profit side, we're showing growth, primarily led here by our insurance business. You see profits doubled in the insurance segment, and banking and investments also showed improved performance. So what I'd say is we're off to a good start for 2024, and really looking forward to the rest of 2024 and working towards our 2030 goals of being the #1 Caribbean brand in the world. Thank you very much.
Thank you very much, Mr. Webby and Mr. Masada, for those very interesting presentations, very informative. We are now at that point, ladies and gentlemen, where we will entertain questions for a while from those present. Please remember what our secretary said. We'd like you to raise your paddle, and I see them going up already. And please identify yourself. Although I see a mix of new and not so new participants in these sessions, not everybody knows everybody. So Mr. Staple, although we all know you, there are some youngsters here who don't know you. So please tell them your name, sir, when you get up.
Mr. Chair.
Yes, sir.
Good afternoon, sir.
Good afternoon, sir.
Thank you very much for inviting us to our meeting this afternoon. On a face-to-face basis, we appreciate it a significant lot as shareholders when we can meet face-to-face. Thank you very much for doing that.
And you see that every chair is filled, sir.
Our CEO, Mr. Webby, and his associate, Mr. James, they have both, along with their staff, have done significantly well in growing this company and making it the company to talk about in today's world. Thank you very much, Mr. Webby. Thank you very much, Mr. James. And may God's blessing be with you all and your staff. Mr. Chair, turn me the page. What is that now? Page on a financial review.
So the lower left. All right.
What page here, Mr. Staple?
Financial review. Just a second here. page, there's no page on it. There's no page really.
Page? Is it page 6, Mr. Staple?
Page what?
6?
Page 10.
Page 10.
All right. On the market capitalization, what led to this reduction in market capitalization? From 82 billion to 78.9 billion dollars. What caused that?
Sorry, you have to go, Andrew. Sorry, as you know, Mr. Staple, the Jamaica Stock Exchange, I would say most, if not all, stocks are down in value. So market capitalization is the number of stocks issued multiplied by your share price. So our share price actually went down, and that is the reason why you would see that the market capitalization is down.
So the reduction in the share price has led to market capitalization being down.
Market capitalization for the rest of the shareholders is the number of shares times the share price. That's how you calculate market capitalization.
And what led to the price earnings ratio moving from 11.7% to 10.10?
Andrew?
On the same page.
Thank you. Again, it really is impacted by the change in share price. You'll notice in that same table that in 2022, we ended at a share price of $83, whereas at the end of 2023, it was $79.42. So when you price earnings is really price divided by earnings, and you actually end up with, we had higher earnings and a lower price. So that kind of calculation, lower numerator and higher denominator ended up giving us that lower price earnings. So it really is an indicator, as you know, when your price earnings falls, it's an indicator that we are undervalued.
Do you see the price moving in the short term?
Mr. Staple, that's a very, very important question. Let me deal with it from a macro point of view first. With interest rates where they are now, and I am seeing fixed instruments being issued out there at over 10%. I don't want to sound too negative, but I don't see the stock market, the general Jamaica Stock Exchange market, moving in a positive way for 2024 unless we get inflation under control and interest rates start to go down.
So, Mr. Chair.
But our objective, as I said in my presentation, is to ensure that the GraceKennedy group of companies continues to perform well and increase our profitability both in the short and the long term. And by all indications, we are expecting our 2024 numbers to be up, and we are on track to meet our 2030 vision. So our focus is to increase the profitability of the GraceKennedy Group. And as you say every year, Mr. Staple, is to become a more efficient company by growing our revenues also.
Mr. Chair, am I to understand that with interest rates going up, the stock exchange is going to be in serious problem?
I would say that the stock exchange is going to be very flat with interest rates going up, yes.
It will be flat?
Yes.
For 2024?
Yes, because people are basically moving from the equity market to the fixed income market, and we have seen that throughout 2023 and continued in 2024. I really believe, Mr. Staple, that inflation, the biggest monster, we have to get that under control so interest rates will start to go
I
down.
am not convinced that it is under control at this point in time.
I would say that it is being managed very carefully by the BOJ. I saw the latest number where the inflation rate was trending in the right direction, but we still have a far way to go for it to be sustainable.
Mr. Chair, turn me to page 31. Money services are down from 32% to 27%. and banking and investment down from 11% to 7%. What has caused this?
All right, there are a couple of things. What has caused the money sources to be flat or moving in that direction is actually a positive story. I tell you, Mr. Staple, you know from Cliffy Borough days and in the early days, our remittance business was probably 50% of our profitability. What is happening, Mr. Staple? Our food business, especially our international food business, has been growing significantly. So our reliance or dependence on remittances to contribute that amount of profits to the GraceKennedy Group has lessened. In addition, the remittance business or market in Jamaica, as I said in my presentation, is down. So that would have caused the remittances to be flat. In terms of the banking and investment, banking, First Global Bank is actually doing very, very well. What is not doing well or has caused that reduction is GK Capital, because it's an equity business. And the same discussions that we have been having, our equity portfolio, as you have seen from other companies, is down. So what is happening is that when we do the fair value of our equity portfolio in GK Capital, we have taken a hit on that because the market prices are down. So, so that is the reasons why you see the bank and investment down. It's not First Global Bank. First Global Bank is doing well. It is the equity portfolio in GK Capital.
Mr. Chair, are you convinced, Mr. Executive, that people, Jamaicans who leave Jamaica to go and work in other countries are being fooled? Are they being fooled, Mr. Chair?
I don't.
Are they thinking that they are getting higher salaries, but when they take out the assessment of money coming to Jamaica to help their parents, to help their older people, are they convinced that it's better or is it worse?
Well, I can't speak on behalf of the diaspora. All I can tell you that inflation is a worldwide phenomenon, and inflation in the United States of America is pretty high. So their disposable income would have been reduced. I'm not sure if I'd use the word fool, but they're also under some pressure. Mr. Staple, I was chairman of the diaspora conference, right? This is about a year or two ago. And I was having a discussion with a gentleman from California. And he was saying it's almost double to fill his gas tank now. And you know, you have to be dependent to move around the United States in your motor vehicle. Food prices, while it is published that inflation in the United States is like 3 or 4%, we have done, Andrea Coy, we have done our own assessment, and food prices are up in the United States by about over 10% in most cases, basic food prices. So, so they're under pressure also. So the ability to send money back home has been reduced. But we are noticing, Margaret and Grace, a slight turnaround in terms of remittances coming into Jamaica.
Mr. Chair, am I to understand that the outlook for Jamaica and the world is not in a good shape?
Are you speaking to me as a senator or as the CEO of GraceKennedy? I can only quote what I'm seeing the World Bank and the IMF is saying, and actually they're saying that they're projecting, I think it's a 2% growth for the world growth for 2024. So it's moving in the right direction.
Mr. Chair, turn me to page 107. You have adopted the IFRS 17.
Yes.
And this has created a significant problem for us. How do you plan to correct this?
So I'm going to ask Andrew, who is the IFRS expert, IFRS 17 expert. but because GraceKennedy is not heavily involved as a overall revenue in terms of life insurance, which IFRS 17 more or less impact, we are managing it very carefully. Andrew, you want to touch on IFRS 17?
Thank you. Thank you, Chair. Mr. Staple, just to let you know, in terms of IFRS 17, we have fully adopted it, and it is now reflected in our financial statements. You'll notice in note 41 that we really talk about impact, which has not been too significant. So in 2022, going into the year, you'll see a $20 million impact on the profits for that. However, going forward, given the composition of our insurance portfolio, which is more on the general side, we don't believe that it is going to have a significant negative impact going forward. It's an impact that every single insurance company, both in Jamaica and worldwide, have to deal with. So I think we just have to live with the way that the accounting standards are and do our best to work through them. But as I said, impact not expected to be significant.
Mr. Staple, I'll take one more question from you because there are a number of people paddles up that I need to address.
Okay, Mr. Chair. One more question. Hold a second here. Mr. Chair.
Yes, sir.
Turn me to page 131. What accounted for administrative expenses moving from $10 billion to $11 billion to $12 billion? What accounted for that?
Page what, Mr. Staple?
131.
What's that 131?
121, page 121. Your administrative expenses moving from $10.6 billion to $11.994 billion. What caused that?
I mean, quite a bit of that would be inflationary, Mr. Staple. Inflationary increases. I want to make a point, and I call your name at a lot of our meetings about operational efficiency when you speak about funds going to the bottom line. And I was not joking, it was a serious point I was making when we posted that we did a $1 billion US revenue company. And I'm saying that we need more of that $1 billion flowing to the bottom line in terms of profitability. What I have mandated my management team to do on a company by company basis is to go through every expense line to see how we can become more efficient. Because when you're in an inflationary environment with high interest rates, things can get out of control. So at my level, at the group CEO level, you have to be very detailed. You have to micromanage every expense line, or things can get out of control. And my team have mandated them to look at every expense to see how we're going to become more efficient, how we're going to look at our business processes so we can have more funds flowing to the bottom line. So I would say your question in terms of administrative expenses, and I can ask Andrew Mesado to expand on it, but my response would be that a lot of what you're seeing there in terms of increasing expenses is inflationary. Andrew?
So, Mr. Chair, am I to understand that you are watching your expenses carefully?
Oh, that is something that we do every Monday morning. Every Monday morning, we look at our expenses and we have to manage it very carefully. And when you're a company like a big company like GraceKennedy, you have to ensure that you manage it on a group basis strategically. In other words, what you don't want to see is that a supplier is selling GK Capital or FGB stationery at $10 and selling another company at $12, right? You need to ensure that you centrally look at your expenses to ensure that you can manage it and negotiate the smaller little things, right? Everything add up, even the envelopes that you put your letters in or your thing in. We manage it. Listen, Douglas O'Rian, see him over there, as a young CFO, right, gave me an exercise to reduce expenses by $6 million. And I said to myself, that's impossible. And when we start looking at the smaller things and you add them up through the GraceKennedy group, you'll be surprised to see how the $6 million was arrived at.
Mr. Chair.
Mr. Staple, you
I
know
would
that
like-
people are going
I
to
would- I
say
would
that I'm showing favoritism to you for allowing you so much. It's only because we know you and love you so much that we are doing this. Last one, sir. Last one, and then I can come back to you at the end. How about that?
Okay. I am not going to ask a question. I'm just going to make an observation.
Okay, sir.
And that observation is that our CEO has promised that things will turn out quite good for GraceKennedy in 2024, and that we will not be caught napping. You know, we won't be caught with our pants down on our toes, but we'll be happy to note that in 2024, things will change around and that GraceKennedy will come out on top. Thank you very much, Mr. Chair.
Thank you very much for your interpretation, Mr. Staple. Yes, sir.
Chair, good afternoon.
Please introduce yourself.
Sure. Jason Craig Watson. Just want to first say it was a very good presentation to our CEO and our CFO. Thank you for the, just sharing so openly and so that we can understand. Hopefully everybody understood, but it was some impressive numbers, and I still see that the vision is there. So I just have a question and a comment about the foundations, because one of them especially is dear to me. The Grace and Staff Community Development Foundation, which I was involved with when I was a GraceKennedy employee. I would like to know if it can be revealed, that hopefully it should be, what is the amount of money that is being pumped into those two foundations by the GraceKennedy group at this point in time? And then two, can that amount be increased for this year?
So thank you for that, Jason. And like you, the Grace and Staff Development Community Foundation is very dear to my heart. And in fact, I'm the chairman of that foundation. I've taken over from Jimmy Solomon. God bless his soul. Jason, as you know, for every dollar the staff contribute, the company doubles it. So I don't want to call a figure in terms of how much we have actually allocated to the Grace and Staff, but what I'm saying is that our staff is very engaged, very committed, and the amount of funds donated or contributed by our staff has been increasing steadily. What we have also been doing is looking for outside funding for the foundation, and that has been going very well. So right now we're sending over 1,500 students that would not have otherwise had the opportunity to go to school and get proper nutrition, and I'm extremely, extremely pleased. When I go through the numbers in terms of their CXC results, we have students getting 9 A's, and that is something that is very heartwarming to me. So the foundation is doing very, very well, and we are committed to it, and something that I'm very passionate about in terms of education.
So, Don, I also just want to share that I just recently had a meeting with Curtis Sweeney, Don.
Yes, Councillor Curtis is doing a brilliant job.
Yeah, man. And I have offered my services free of cost to start a little training workshop for the kids and adults, just about personal finance.
Oh,
So
good.
Curtis and I are going to be working on that. So people need to feel, just feel a sense of volunteerism, even as shareholders, to get involved with the Staff Community Foundation.
Thank
Thank you. Yeah.
Thank you very much, Jason. Thanks a lot.
Let me go to, there are several questions coming in online. Let me go to the first one. What is the latest update on the listing of GK Foods on an international stock exchange?
Give me 1 minute here, Prof. So, sorry, Jason, the figure has actually been published. It's 370 million that we have allocated to the Grades and Staff Development Community Foundation. Yeah. That's our target, 370 million.
It's in our ESG report.
In our ESG report, my good ESG ambassador. Well, with your help, I'm sure we can get to the 500. Sorry, Chairman, what was the question?
The question is, what is the latest update on the listing of the GK Foods on an international stock exchange?
Okay, so we have engaged investment bankers. We have had discussions with Citibank, with Broadspan. There is some work to be done. The key pillar for that is that in terms of size, Mr. Chairman, we'd have to look at an acquisition primarily in North America or the UK for it to be of size to make sense to that exchange. And we are, in terms of acquisition, we have a nice pipeline working on. I can't say too much about it, as you'd appreciate, but we are making steady progress. One of the main objectives of listing is to look at our balance sheet, and Andrew Masada has been working with PricewaterhouseCoopers to see how we can look at the balance sheet of GraceKennedy. And Andrew, maybe you want to comment on that, and PricewaterhouseCoopers is here, of the progress that we are making to reconstruct the balance sheet to ensure that it is worthy of international listing.
Thank you. So, yes, and what we need to make sure is that the structure of the balance sheet on the food side is appropriate, and attractive to an international investor. So we're looking at the options right now in terms of how the food companies are owned. It is through the parent company, and so we have to determine what's the best structure to bring that segment on its own in terms of its own financial position. So yes, we're working with PricewaterhouseCoopers. We have looked at some structure proposals, and right now we're at the point where we can look at what's the ideal selection to make, and then look at planning that over the next period. As was mentioned, you also need to be at the right size for it to be attractive to an international market. So that is another element that we're looking at.
So Chair, I need to emphasize again that the listing of GraceKennedy on the International Stock Exchange is not something that is going to be immediate. It is a medium-term objective, and we are going to be continuing to have discussions with international investment bankers in terms of timing, size of the company to list. Our initial discussions with investment bankers in New York has been very positive. There seems to be a lot of interest in ethnic food companies listing on the International Stock Exchange. So we will continue to monitor the market to ensure that the timing will be right when we list. But the initial discussion has been very positive.
Thank you, Don. Livingston, welcome back. We haven't seen you in a little while.
Thanks a lot. Mr. Webby?
Yes, sir.
If enough man is still like you say, boy, Jamaica that be a good GraceKennedy. If it's still like GraceKennedy, Jamaica that be a good country. I tell you that. We're good, but the energy we have, we're punching in if other company follow you, man. Let me say, Just follow your footsteps, or you do your thing.
Well, Livingston,
You know?
I must say, I thank you for those comments. I'm actually blushing.
Yeah, you know, over the years, you know,
But I really have a good team in place
yeah, man.
that supports me a lot in terms of meeting our objectives.
Yeah, and next thing is, Mr. Webby, if you let me not say that big government, me undermine, you know. So if the government, Mr. Webby, that a rebound and value something, I tell you, that speed energy we have in here, man, I tell you, you know.
Well, I'm not going to comment on it.
Yeah, we just show you still. With the ethics, Mr. Webby, with the you have to have faith. God made you have to have faith in what to do. You see the ethics, Mr. Webby. Me start from about 24-year-old. We buy stocks. We start from about $30,000, and me sell stocks about 2010. Sell stocks from left, right, and center. And I say, boy, God is good. Me use the money I invest in the other things. I'm building my portfolio at JMB, Mr. Webby.
GMMB?
Yeah.
GMMB?
Yeah, man. Yeah. Stocks, the stocks them go up, so we sell stocks left, right, and center.
Keith Duncan is my good friend.
Yeah, man. GraceKennedy. No, me try.
Yeah, but
no, me try to show you. Say,
Kareem,
a fear to have.
Hold on. See the head of GK Capital, you know?
Yeah.
See the head of GK Capital, you know? You know him was before? GMB.
Yeah.
So,
you have faith in the ethical market, man. We know, man. All right.
So Livingston,
I buy enough shares now, man.
I know you have enough shares, but talk to him for me now, man.
Yeah, all right.
Give us an opportunity.
Yeah, all right.
Give us an opportunity. Beg you.
Right, yeah. You can turn to page 185. So that's securities. The group and the company. Bank of Jamaica. You can hold this, me talk. Just hold it. The Bank of Jamaica, Government of Jamaica Securities, Foreign Government Securities, Corporate Bonds, and other debit securities, others. You can explain to me what make up this others of 12,600,000 and something, and the next others of 639 million. Could you explain for me 2023 and 23, the group of a company?
Andrew?
Thank you for that question. So in relation to other debt securities, $12.6 billion, this really has to do with securities like reverse repo arrangements and certificate of deposits. So those are the main components there. And then in terms of other, again, these are kind of small unlisted debt securities that we own. But as you can see, a very small portion that's under $1 million.
Mr. Chairman, this $11 million with the bond, is it in US or Jamaican?
These figures are in Jamaican dollars, yes.
Okay. All right, thanks a lot, yeah.
Livingston, remember to check Kareem before you leave.
Yeah, man.
I'll take another from our participants online. What new products or innovations can we expect from GK Foods in the upcoming years to strengthen its market position internationally?
Prof, when I saw that question, I laughed because 1 year, it was at an AGM too. I started to reel off all the new products that we're going to be introducing. And I was called to a meeting by my executive team and said, you're sharing all my secrets? So I'm going to be very careful. What's the one of them here? Where's the cameraman? Tropical Rhythms in Tetra Pak. We have a team, and maybe my executive can help me to answer this one here. Andrea, where's Andrea? Andrea, why you don't share with us without giving the details like I did a few years ago of somebody that brought, maybe we can speak from it from a category point of view, Andrea.
Right, yes, because just like you, my team would kill me. So as we look at innovation, we're really looking at trends. What are the consumer trends we're seeing? We're seeing a trend towards better for you. And that in itself is a dilemma because the sugary and the sweet and salt stuff still selling, but that's a space that we believe we need to enter based on the trends. We're already a very strong company as far as beverages are concerned. So that's another category. We're really looking at the categories that we are strong in, seasonings, sauces, to augment those with new to market products.
Yeah, in terms of, I'm going to use this as an example, and I'm going to ask Grace Burnett to comment on it. We've been speaking a lot about remittances. The retail remittances, what we know as you go to your location in the United States and you send money home, is not growing at all, zero, and in some cases declining. Where it's growing in terms of money services is digital transformation, digital remittances is growing anywhere between 40 and 45%. So what you're going to be noticing is that GraceKennedy through GK1 is going to be introducing a number of innovative new services through GK1 that will enhance the digital transformation of the GraceKennedy group of companies. And in fact, what I should have mentioned is that GK1, we're going to be going into Guyana, Trinidad, Cayman, and BVI. Sorry, Franco, I should have mentioned this, and maybe in a call a question, but there's interest for Catherine's Peak, Mr. Chairman, out of the Bahamas and Cayman Islands. So there's export opportunities for Catherine's Peak in the Southern Caribbean. We just need to work out the logistics and the shipping, but I believe that's another opportunity for Catherine's Peak going forward. So Grace, maybe you want to speak about digital money services.
Yeah, I can very briefly. I mean, we saw this trend pre-pandemic, but with the pandemic, we would have seen a move towards digital. What's been interesting, though, is that people are looking for many ways to engage. So they'll engage digitally, and tomorrow they'll engage with retail. But what's been happening is that digital has been growing, and that's why we kind of rolled out GK1. And what's been happening with that is persons receiving the remittances in their wallet. So 24/7, when people would normally be asleep, locations are closed, people are actually downloading remittances. That would have led us to think about, what about those persons who are sending remittances? Because we do have a lot of Jamaicans who send remittances. And so we've been working through and are very close to the completion now of a digital send feature. You'll be able to use your phone, all of this in the power of a phone, and you'll be able to just send your remittances. So think about the persons who have students overseas, and those persons. We also are introducing a send to a wallet. So you will be able to, when you go on Western Union overseas, you see the GK1 wallet, and you can send directly to the wallet. So we're just listening to our customers and just responding to their needs, and also just focused on where we see the trends going to make sure that we are at the forefront of what's happening.
Thank you, Grace. And what we have seen with GK1 is that people are actually, our customers, our consumers are actually sending funds on a Sunday. And the repeat rate for GK1 is 74%. So, Mr. Chairman and shareholders, obviously they like the experience of using GK1 because 74% is extremely high for repeat customers.
It's impressive, Don. Thanks. I have one more from overseas and from online. Sorry, it seems that there's a lot of interest in the listing internationally. When you list internationally, Mr. Webby, what will be some of the possible uses of these funds?
Okay, well, it's going to be for further expansion and growth, acquisitions and further growth, not only internationally, but I want to emphasize again in Jamaica. So I would answer that question this way also. We have a 2030 vision, which is aggressive, $2.1 billion in revenue, and that's going to come through acquisitions and a significant increase in our profitability. So the funds that we raise is going to be support that growth that we have outlined in our 2030 vision. We're seeing opportunities also, and I know, Chairman, you're on the UK board, you're big on it, there's going to be opportunity for us in Europe to grow the GraceKennedy group in Europe. And there's an acquisition that we're looking at there, and I'm very excited about that one.
Thanks, Don. Yes, sir. Go ahead, Mr. Steve. One question this time, right?
What is that, sir?
I said one question this time.
Yes.
Mr.
Chair.
Yes, sir.
The sugar, we have become very healthy. And as we get younger, health plays an important part in our lives as we get younger. Mr. Chair, can we cease using granulated sugar rather than the brown sugar? Can we stop using the granulated sugar and use brown sugar instead?
You're talking about in the formulation.
Because when we see it is the brown sugar that they convert to white sugar, and what they use in the chemistry of the brown sugar to turn it into white sugar, that's not good for our health, Mr. Chair. And I'm also wondering what can be done so that this company can start changing from granulated sugar to brown sugar itself.
Well, thank you for the suggestion, but as Mrs. Coy indicated earlier, there's a very big focus now on products which are good for you, healthy products, and in that process, reducing the amount of sugar. Maybe Andrea, he's saying, we should make it clear that we're using sugar in its natural form rather than in its refined form as another health standard. But that's the trend. This is what Mrs. Coy is saying, Mr. Staple.
I would appreciate that very much.
Okay, sir. I think we are just about out. Oh, yes, Livingston. One, and I have one. Yes, go ahead, Livingston.
You can turn to page 170.
170.
Yeah, note C3. Insurance and financial risk.
Yes.
You there, Mr. Chairman?
Yes, I'm with you.
All right, 1 to 3 months, 3 to 12 months, 1 to 5 months, over 5 years total. All right, it's a deposit, securities, sold under agreement of 40,171,000. Bank and other loans, trading and other payables. You could explain to me of 25,764,537. You could explanation on trading and other payables and bank and other loans.
Andrew, you want to?
Thanks. I'll take that one. So yes, this table, as you can see, really reflects a timing of when we need to honor our obligations. Yeah. So the buckets really talk about when you have to pay these outstanding liabilities. So bank and other loans, as you know, really relates to loans that the company has that is outstanding. So that $7 billion means within 1 to 3 months, those will mature for payment. And then the $25.7 billion below trade and other payables, those are the liabilities that are owed to our suppliers, or other bills, things like utility bills, statutory deductions, other payments that are due within 1 to 3 months. Yeah, so it's really timing of the payments. Yeah, look at the 1 to 5 year or something like that. Look at 13,700,000. The dash under the 13 million there. What that signify? All right. So in terms of that is a line trade and other payables within the 1 to 5 year bucket. Yeah. Where we have the dash really signifies that there's nothing outstanding for that time frame. Okay. All right. Thanks a lot.
Balance of our questions this evening has been badly skewed, so I'm going to correct that with the last question this afternoon.
Good afternoon. My name is Muriel Bailey. I'm a shareholder. It's just a small question. Have you begun using AI in your businesses yet, or do you plan to?
Yeah, so thanks. That's a great question. We have started to use it on a limited basis, but what we have done, we have appointed, is Deidre here? Deidre Cousins? Deidre? We have set up a specialized team through the GraceKennedy group to select pros and cons of using AI. AI is going to change the world. It's something that we can't stop. So we have to look and see how we can use AI to the benefit of the GraceKennedy group. And my early indications are that there's going to be some amount of AI being used, and it could result in cost savings and a lot of innovations. But that's a great question, and it's something that the board of directors is particularly interested in terms of how we execute on it. So Deidre has her team in place, and she'll submit a report to me very shortly, initial report very shortly, to see how we can start moving forward in a more decisive way in terms of AI. Thanks.
Thank you.
Great question.
Thank you very much, ladies and gentlemen. I think you would agree we have had a spirited discussion around the things that Don has presented, and persons have perused the annual report and found lots of interesting things to ask about. So thank you very much for those questions. We are now out of time, and we want to thank Mr. Webby and the entire team of executives who have assisted him in responding to all of these questions. We will now take a short break to hear about some of the latest offerings from our GraceKennedy brands. We're going to present you with some of the ads. If you have to take a biological break, now might be the ideal time to do it, but remember it's only for 2 to 3 minutes.
Join the rhythm, enjoy the flavor, the taste that you savor. Share with your friend and your neighbor. We're made in Jamaica. Join the rhythm, enjoy the flavor, the taste that you savor. Share with your friend and your neighbor. We're made in Jamaica. Grace Tropical Rhythms. Join the rhythm.
Every sunrise marks a fresh start, and today there's so much to do. I begin my day by savoring moments with Mom over breakfast, filling our home with warmth and laughter. Then, it's time to get Joshua up and ready for school. As I gear up for a busy day, I rely on a trusted partner to handle my financial needs. From currency exchange to investments, they make managing my finances so convenient. To insurance and money transfers, allowing me to focus on what truly matters. And just like that, my to-do list is done. And I did it all gracefully with the GraceKennedy Financial Group.
Visit GraceKennedyFinancialGroup.com. One group, one goal, so you too can live a graceful life.
You're going to circle around, then you're going to stand in the center, and then you're going to come back for the finale. Come on, it's time to go.
It's a ragamuffin and Caribbean style this. Yeah, man, this is the real Caribbean inside. Enjoy Grace patties in mild beef, spicy beef, curry chicken, or vegetable. Find it in your supermarket freezer.
Ladies and gentlemen, can I invite you to return to your seats now? Well, welcome back. The auditor's report, the director's report, and the audited group accounts have been circulated to shareholders. You will find the director's report on page 82 and 83 of the annual report. And with your permission, I will take the director's report as read. Thank you, shareholders. Will the secretary please table the reports together with the audited group accounts? Mrs. Solomon is not here, but we will take them as having been tabled. I now invite Anicia Boyd of PricewaterhouseCoopers to read the auditor's report. Anicia.
Party delegation is here, man. You're a nice boss.
Thanks, Professor Shirley. Good afternoon, everyone. The Independent Auditor's Report. To the members of GraceKennedy Limited. Report on the audit of the consolidated and standalone financial statements. Our opinion. In our opinion, the consolidated financial statements and the standalone financial statements give a true and fair view of the consolidated financial position of GraceKennedy Limited, the company, and its subsidiaries, together the group, and the standalone financial position of the company as at December 31st, 2023, and of their consolidated and standalone financial performance and their consolidated and standalone cash flows for the year then ended in accordance with IFRS accounting standards and with the requirements of the Jamaican Companies Act. What we have audited. The group's consolidated and standalone financial statements comprise the consolidated statement of financial position as at December 31st, 2023, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flows for the year then ended, the company statement of financial position as at December 31st, 2023, the company income statement for the year then ended, the company's statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flows for the year then ended, and the notes to the financial statement comprising material accounting, policy information, and other explanatory information. Basis of our opinion. We conducted our audit in accordance with International Standards on Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the consolidated and standalone financial statements section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with the International Code of Ethics for Professional Accountants, including international independent standards issued by the International Ethics Standards Accounting Board, ISPA Code. We have fulfilled our ethical responsibilities in accordance with ISPA Code. Our audit approach. Audit scope. As part of designing our audit, we determined materiality and assessed the risk of material misstatement in the consolidated and standalone financial statements. In particular, we considered where management made subjective judgments, for example, in respect of significant accounting estimates that involved making assumptions and considering future events that are inherently uncertain. As in all of our audits, we also addressed the risk of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represent a risk of material misstatement due to fraud. how we tailored our group audit scope. We tailored the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statements as a whole, taking into account the structure of the group, the accounting processes and controls, and the industry in which the group operates. In assessing the risk of material misstatement of the group's consolidated financial statements, and to ensure we have adequate quantitative coverage of the significant accounts in the consolidated financial statements, we designed and performed audit procedures over various components. The group comprised 48 reporting components, of which we selected 29 components, which represent the principal business units within the group and covered entities within Jamaica, Barbados, British Virgin Islands, Trinidad and Tobago, Eastern Caribbean countries, Canada, Cayman Islands, the United Kingdom, the United States of America, and Guyana. Of the 29 components selected, we performed an audit of the complete financial information of 13 components, which were selected based on their size, risk characteristics, or both. For the remaining 16 components, we performed audit procedures on specific accounts and/or specified procedures within that component that we considered had the potential for the greatest impact on the significant accounts in the consolidated financial statements, either due to the size of these accounts or their risk profile. The audit work performed covered 97% of the group's total revenue and 97% of total assets. In relation to the remaining components, we performed other procedures, including analytical review procedures and testing consolidated journals, intercompany eliminations, and foreign currency translation recalculations to respond to the potential risk of misstatements of the group's consolidated financial statements. For components that are in scope of the group audit, we used component auditors from the PwC network firms and non-PwC firms who are familiar with the local laws and regulation to perform this audit work. Throughout the audit, we had regular meetings and correspondence with management and component auditor teams to follow up on progress of the work for all components. The group engagement team reviewed work papers relating to the audit approach and findings of the component auditors. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statements of the current period. These matters were addressed in context of our audit of the consolidated and standalone financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. Key audit matter: adoption of IFRS 17 insurance contracts for the group. Refer to notes 2R and 4441 to the financial statements disclosures of the related accounting policies and balances. On January 1, 2023, the group adopted IFRS 17 with a transition date of January 1, 2022, and restated comparative information for 2022 and 2021, applying the transition provisions for IFRS 17. The adoption of the standard significantly impacted how the group recognizes, measures, presents, and discloses insurance contracts. The adoption of IFRS 17 resulted in a $636.14 million reduction in the equity for the group. Changes in the accounting policies resulted from the adoption of IFRS 17 were applied using a full retrospective approach to the insurance contracts in force as at the transition date. IFRS 17 is a complex accounting standard, requiring considerable judgment and interpretation in its implementation, and impacts how the group recognizes, measures, presents, and discloses insurance contracts. In adopting the new standard, management used significant judgment in developing and implementing accounting policies, including policies specific to transition. With the application of the premium allocation approach, there are many elements embedded in the determination of the carrying value of insurance contracts that required management to use significant judgment in making estimates and assumptions. We consider this a key audit matter, as auditing the group's transition to IFRS 17 was complex, as it related to measurement of the group's insurance contract liabilities with regards to management's assumptions being discount rates and non-financial risk adjustment. Our approach to addressing the matter with the assistance of our actuarial specialists involved the following procedures, amongst others. Evaluated the accounting policies and elections involved in the transition, assessed the appropriateness and consistency of key assumptions, including discount rate and risk adjustment, used in the measurement of insurance contract liabilities by comparing to market data, entity-specific facts and circumstances, and our knowledge of the products and the requirements of IFRS 17. Tested on a sample basis underlying support and documentation such as historical executed insurance contracts, tested the inputs and source information underlying the determination of the discount rates and non-financial risk adjustment, determined a range of independent estimates and compared those to the discount rates and non-financial risk adjustments selected by management, assessed the IFRS 17 disclosures within the financial statements against the requirements of IFRS 17. Based on the results of our procedures, management application of the accounting policies as required by IFRS 17, in our view, was not unreasonable. Key audit matter. Valuation of insurance contract liability for insurance contracts group. Refer to notes 2R and 4.4 of the financials and notes and 17 to the financial statements for disclosures and related accounting policies, estimates, and balances. As at the 31st of December 2023, total insurance contract liabilities amounted to 10.94 billion for the group. Insurance contract liabilities are determined in accordance with IFRS 17. These requires the use of complex valuation models and assumptions to measure groups of insurance contracts as a total of fulfillment cash flows plus a risk adjustment for non-financial risk and a discount factor. The group measures insurance contracts issued and reinsurance contracts held by applying the premium allocation approach, PAA. There is generally less information available in relation to insurance contract liability, which can result in variability between initial estimates and final settlement. A range of methods may be used to determine these provisions. Management uses qualified external actuaries to assist in determining the valuation of insurance liability. The cost of capital method was used to derive the overall risk adjustment for non-financial risk. In the cost of capital method, the risk adjustment is determined by applying a cost rate to the present value of projecting capital relating to non-financial risk. The bottom-up approach was used to derive discount rates. Under this approach, the discount rate is determined as a risk-free yield, adjusted for differences in liquidity characteristics between the financial assets used to derive the risk-free yield and the relevant liability cash flows, known as the liquidity premium. The risk-free yield was derived using government bond rates available in the market, denominated in the same currency as the product being measured. We focused on this area because the liability for insurance contracts issued measured under the PAA includes significant and complex assumptions such as discount rates, claim settlement patterns, methods used to measure insurance contract liabilities, including risk adjustment for non-financial risk. How we addressed the key audit matter. The approach to addressing the matter with the assistance of our actuarial experts involved the following procedures, amongst others. Obtained an understanding of management's end-to-end process and controls supporting the determination of insurance contract liabilities. Tested on a sample basis the completeness and accuracy of insurance contracts and related claims to source documents as it pertained to premiums, unearned premiums, claims outstanding, and claims paid. Evaluated the suitability of the methodology used by management's actuary in establishing insurance contract liabilities against established actuarial practice and or knowledge and experience. Performed a methodology and assumptions assessment of management's determination of discount rates and risk adjustment in the actuarial valuation, considering market data and component-specific facts and circumstances. Evaluated and tested the reasonableness of management's claim settlement pattern by inspecting historical information and sensitized the outputs to evaluate for reasonableness and management bias. Assess the independence, experience, objectivity of management's actuarial experts. The results of our procedures indicated that the assumptions used by management for determining the valuation of insurance contract liabilities were not unreasonable. Key audit matter: accounting for business combinations intangible assets group. Refer to notes 2B, 49, and 39 of the consolidated and standalone financial statements for disclosures relating to accounting policies and balances. The group acquired 100% of the share capital of Scotia Insurance Caribbean Limited, SICL, and Unibev Limited, Unibev, on the 31st of March 2023 and 26th of October 2023, respectively. On the 14th of February 2023, the group also acquired an additional 35% of Catherine Speak Bottling Company Limited, CP, which brought its total shareholdings in the company to 70%. Management assessed that the acquisitions qualified as a business combinations, resulting in the recognition of $2.5 billion of goodwill. Valuations of intangible net assets acquired were performed as part of the purchase price allocation, PAA, which resulted in the group recognizing trademarks, licenses, and exclusive agency agreement intangible assets totaling $1.84 billion. We focused on this area due to the significance of intangible assets and the nature of business combinations, the accounting requirements of which can be complex, and require management to exercise judgment in determining certain estimates. The most significant is the determination of the PAA. Management engaged external experts to assist with the determination of the PAA, which encompassed identifying and estimating the fair value of intangible assets acquired. The determination of fair value involves significant areas of judgment, which is based on the inputs and assumptions in the model, such as business growth rates, attrition rate, future margins, commissions paid, and discount rates. How we assessed the key audit matter. Our approach to addressing the matter with the assistance of our valuation specialists involved the following procedures, amongst others. Read the shareholder, the share purchase agreement, and evaluated the appropriateness of the accounting for the acquisition as a business combination against management's accounting policies and the applicable accounting standards. Held discussions with management to understand and evaluate their basis for determining assumptions. Evaluated the application of the valuation methodologies used to derive their fair value of the identified intangible assets. Tested the reasonableness of the valuation assumptions inputs by corroborating the key variables being the business growth rates, attrition rate, future margins, commission paid, and discount rates to historical and prospective financial, industry, and economic information, taking into consideration our knowledge of the group and its industries. Where relevant, considered third-party sources and challenged management's future revenue estimates considering changes in the market or actions by competitors. Assess the competence and capability of management's valuation expert. We recalculated the goodwill, being the difference between the total net consideration paid and the fair value of the net assets acquired for mathematical accuracy. Based on the audit procedures performed, management's accounting, judgments, and estimates relating to business combinations were not unreasonable. Key audit matter: IFRS 9 financial instruments, probabilities of default, forward-looking information, and significant increase in credit risk group. Refer to notes 2H, 3CI, and 8, 6, and 9 of the financial statements for disclosures of related accounting policies, estimates, and balances. As at the 31st of December, the group loans and advances totaled $41.1 billion net of impairment. The group's debt securities measured at amortized cost and fair value through OCI, through other comprehensive income, fair value through OCI totaled $5.16 billion net of impairment. In aggregate, the above exposures represented 24% of total assets as at the reporting date. The resultant impairment recorded under the expected credit loss ECL impairment model amounted to $1.82 billion for loans and advances and $363.7 million for debt securities. In assessing impairment, IFRS 9 prescribes a forward-looking ECL impairment model which takes into account reasonable and supportable forward-looking information as well as the probability of default, PD. PD represents the likelihood of a borrower defaulting on their obligation over the next 12 months or over the remaining lifetime of the obligation. The 12-month and lifetime PDs are determined differently for loans and advances and investments. For loans and advances, management developed PDs based on the group's specific historical default rates for each industry classification. In performing historical analyses, management identified economic variables impacting credit risk and ECLs for each portfolio. For debt securities, we include sovereign and corporate securities. PDs are developed by reference to external collated data by Standard & Poor's S&P with adjustments for industry and country-specific risks where appropriate. The estimation and application of forward-looking information requires significant judgment. Stage 1 and Stage 2 credit loss allowances are modeled based on macroeconomic variables or changes in the macroeconomic variables, which most closely correlate with credit losses in the relevant portfolio. Each macroeconomic scenario used in the ECL calculation incorporates forecasts of the relevant macroeconomic variables. In the event of a significant increase in credit risk, an allowance or provision is required for ECL resulting from all possible default events over the expected life of the financial instrument's lifetime ECL. The consideration for days past due, as well as an adverse change in the borrower's credit rating, the industry, or the economic environment are factors considered in determining whether there is a significant increase in credit risk. The estimation of ECL in Stage 1 and Stage 2 is a discounted probability-weighted estimate that considers the minimum of 3 future macroeconomic scenarios. The base case scenario is derived from macroeconomic forecasts, which are publicly unavailable. Upside and downside scenarios are set relative to the base case scenario based on the reasonably possible alternative macroeconomic conditions. We focused on this area due to the complexity of the techniques used to determine PDs, to identify a significant increase in credit risk, and the number of significant assumptions made by management regarding the possible future economic scenarios as it pertains to loans and advances and debt securities. How we addressed the key audit matter. Our approach to addressing the matter with the assistance of our valuation specialists involved the following procedures, amongst others. Updated our understanding of management's ECL model, including any changes to source data and assumptions, tested the completeness of the loans and advances and debt securities to determine whether all items were included in the ECL models by agreeing the models to detailed loans and security listings, evaluated the reasonableness of management's judgments pertaining to PD, significant increase in credit risk, and forward-looking information, including macroeconomic factors impacting the weighting and scenarios as follows. Loans and advances. PD. Tested the critical data fields used in the ECL model for the PD determination, such as default rate, effective interest rate, write-off data, and loan type by tracking data back to source documents. Reperformed the calculation of days past due, a key data input in the PD parameter in the group's banking system on a sample basis. Significant increase in credit risk. Evaluated staging of loans and advances and compared our results to those identified and classified by management. Debt securities. PD. Tested the critical data fields used in the ECL model, such as the maturity date, amortized cost, accrued interest, credit rating, and interest rate by tracking back data to relevant source documents. Agree the credit ratings and historical data used to calculate the PDs on a sample basis to the external sources, such as external rating agencies. Significant increase in credit risk. We tested on a sample basis the accuracy of the initial credit risk and credit risk at the reporting date using rating agency definitions of investment grade, and calculated the appropriateness of the group classification of debt securities at Stage 2. Performed an independent qualitative assessment for a sample of borrowers to determine if there was any adverse public information affecting the criteria used to perform the staging. Inspected the financial statements for a sample of borrowers to determine if there was any significant downturn in financial performance and aid in assessing the staging for borrowers. Forward-looking information, loans and advances, and debt securities. assess the reasonableness of the group's methodology for determining economic scenarios, including appropriateness of the gross domestic product and unemployment rate, economic factors utilized by management. Evaluated the reasonableness of the increase in the weighting used for the worst-case scenario by agreeing the forward-looking information to the external source published or pronounced by reputable third parties. Sensitized the probability weightings using the ECL calculation. The results of our procedures indicated that the assumptions used by management for determining the probabilities of default, significant increase in credit risk, and forward-looking information were not unreasonable. Other information. Management is responsible for the other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statement and our auditor's report thereon, which is expected to be made available to us after the date of this auditor's report. Our opinion on the consolidated and standalone financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements for our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statements. Management is responsible for the preparation of the consolidated and standalone financial statements that give a true and fair view in accordance with IFRS accounting standards and with the requirements of the Jamaican Companies Act, and for such internal controls as management determines is necessary to enable the preparation of consolidated and standalone financial statements that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statements, management is responsible for assessing the group and company's ability to continue as a going concern, disclosing as applicable matters relating to going concern, and using the going concern basis of accounting unless management either intends to liquidate the company, the group, or the company, or to cease operations, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and company's financial reporting process. Auditor's responsibilities for the audit of the consolidated standalone financial statements. Our objectives are to obtain a reasonable assurance about whether the consolidated and standalone financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually and in aggregate they could reasonably be expected to influence the economic decisions of users taken on the basis of these consolidated and standalone financial statements. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatements of the consolidated and standalone financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and company's internal control. Evaluate the appropriateness of the accounting policies used and the reasonableness of accounting estimates and the related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, Whether a material uncertainty exists related to events or conditions that may cast doubt, significant doubt, on the group or the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the consolidated and standalone financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group or company to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosures and whether the consolidated and standalone financial statements represent the underlying transactions and events in a manner that achieves fair presentation. Obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. We are responsible for the direction, supervision, performance of the group. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, amongst other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in the internal control that we identified during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence and, where applicable, actions taken to eliminate threats and safeguards applied. From the matters communicated with those charged with governance, we determined those matters that were of most significance in the audit of the consolidated and standalone financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because of adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept so far as appears from our examination of those records, and the accompanying consolidated and standalone financial statements are in agreement with and give information required by the Jamaican Companies Act in a manner so required. The engagement partner on the audit resulting in this independent auditor's report is Paul Williams. Signed, PricewaterhouseCoopers Chartered Accountants, February 29, 2024, Kingston, Jamaica.
Very well done, Ms. Boyd. Thank you very much. We will now consider the resolution number 1 in the notice. Resolution number 1, the motion. May we have a motion that the audited group accounts for the year ended December 31st, 2023, and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Mr. Rowe and Mr. Seconded, Mr. Staple. So moved. We will now take the vote. Shareholders, I invite you to cast your vote. We're given 15 seconds for people online. Thank you. Thank you very much. Shareholders will wait for the ones online. We're just awaiting those online for another few seconds. I think they're all cast now. I declare the results are in, and I declare the motion carried. The second resolution is the approval and ratification of dividends. May I have a motion that, as recommended by the directors, the interim dividends paid on the 6th of April 2023, 16th of June 2023, and the 22nd of September 2023, and the 15th of December 2023, and they are hereby declared as final, and no further dividend be paid in respect of the year now under review. Sure of Pat. Yes, sir. Yes, sir. Okay. What's the name? David Rowe. Rose, sorry. Seconded by Mr. Rose. We can now move to the vote, Madam Secretary. Can I see the paddles and hands? Yes. Thank you. We'll wait a few more seconds for those online. The results are in. I declare the motion carried. Yes. No, that is something that was done some time ago, years ago, Livingston. Okay, sir. To elect directors retiring by rotation, I now ask our corporate secretary, Mrs. Gail Moss Solomon, to take the chair for the purpose of considering resolutions for the re-election of directors, as I am one of the directors up for re-election.
Thank you, Professor Shirley. Good afternoon again. We will now take resolution to re-elect our directors en bloc. The directors retiring from office by rotation pursuant to Article 102 of the company's Articles of Incorporation are Dr. Indiana Minter Coy, Mrs. Gina Phillips Black, and Professor Gordon Shirley, who, being eligible, offer themselves for re-election. We're just going to share a little bit about our directors, and then you can go ahead, and I'm hoping some persons on this side of the room will move and second, as we have had many from that side. Dr. Indiana Minter Coy is Deputy Executive Director and Senior Lecturer at the Mona School of Business and Management at the University of the West Indies. She also leads the Entrepreneurship, International Business and Strategy arm and sits on the school's board of directors. Her main areas of expertise include international business with a focus on diasporas and migration, entrepreneurship, disaster risk reduction, business continuity management, and sustainability. And she has been recognized globally for her publications and work in these areas. Dr. Minter Coy is a member of the GraceKennedy Remittance Services Limited Board and also serves on several international boards, including the Academy of International Business, Latin America, and the Caribbean. Notably, she is the first Caribbean national to serve in this position. Mrs. Gina Phillips Black has been the chair of GraceKennedy's Corporate Governance and Nomination Committee since 2012. She's an attorney at law and partner of Myers, Fletcher, and Gordon, where she is head of the firm's commercial department. Mrs. Phillips Black also has responsibility for MF&G's corporate and regulatory compliance practice, and she actively represents multilaterals, foreign lenders, investors, and major players in the local and international business community. She is currently the chair of GK General Insurance Company Limited and has served on several public sector boards. Mrs. Phillips-Black was selected as an International Financial Law Review Women Leader for Jamaica for 2021, 2022, and 2023, based on her banking, capital markets, and mergers and acquisitions experience. Professor Gordon Shirley has been chairman of GraceKennedy Limited since 2014. Professor Shirley is the president and CEO of the Port Authority of Jamaica, and his main areas of expertise are strategic planning, technology, change leadership, and product service delivery, also governance. Professor Shirley had also served as Jamaica's ambassador to the United States of America and permanent representative to the Organization of American States. He has had a distinguished academic career at the University of the West Indies, serving as the Carlton Alexander Professor of Management, Executive Director of the School of Business, and Pro-Vice Chancellor and Principal of the Mona campus. Professor Shirley is also currently the chairman of GraceKennedy Foods USA LLC. Please note that further details about all our GraceKennedy directors are available on our website and in our 2023 annual report. All directors presented here have an excellent record of board meeting attendance and participation. The board is satisfied that these directors continue to make a valuable contribution to the board and have demonstrated their commitment to continue serving as directors. Resolution 3A. May we have a motion that the directors retiring by rotation and offering themselves for re-election, that is Dr. Indiana Minter-Coy, Mrs. Gina Phillips-Black, and Professor Gordon Shirley, be re-elected en bloc. I see it moved by Carrie Ann Evans and seconded by a lady in the back whose name I do not know. I apologize. Daphne Drisdale. Thank you very much. So moved. We will now take the vote. Shareholders, I invite you to cast your vote. Thank you, shareholders in the room. We now await the results from our shareholders voting online. The results are in. I declare the motion carried. Re-election of directors retiring by rotation. Resolution number 3B. May we now have a motion that Dr. Indiana Minter-Coy, Mrs. Gina Phillips-Black, and Professor Gordon Shirley be and they are hereby re-elected directors of the company. Moved by Mr. Radcliffe Daly and seconded by I think Mr. Staple. Madam, what is your name? Sorry? Loran, and seconded by Loran Nocheta. Thank you very much. So moved. We will now take the vote. Shareholders, I invite you to cast your vote. Thank you to the shareholders in the room. We'll now await the results from our shareholders who are online currently voting. The results are in. I declare the motion carried. Thank you, shareholders. I will now hand the chairmanship back to Professor Shirley.
Thank you very much, Mrs. Moss Solomon. We now proceed to consider the resolution to approve directors' remuneration. May we have a motion? This is resolution number 4. May we have a motion that the amount shown in the accounts of the company for the year ended 31st of December 2023 as fees of the directors for their services as directors be and is hereby approved, and B, that the compensation subcommittee, a subcommittee of the Corporate Governance and Nominations Committee of the Board of Directors, is authorized until the conclusion of the next annual general meeting to fix the fees for directors. Yes, sir. Sorry, Ms. Campbell. You're in a shadow over there. Yes. Roxanne Smichael has seconded. So moved. We can now take the vote. Shareholders, I invite you to cast your vote. Thank you for our shareholders in the room. We now await the results from our shareholders voting online. The results are in. I declare the motion carried. Resolution number 5, appointment of auditors. May we have a motion that PricewaterhouseCoopers Chartered Accountants, having signified their willingness to serve, continue in office as auditors of the company pursuant to Section 154 of the Companies Act, to hold office until the conclusion of the next annual general meeting at a remuneration to be fixed by the directors of the company. Yes, sir. Oh, Mr. Stapler seconded. So moved. We will now take the vote. Shareholders, I invite you to cast your vote. Thank you to our shareholders in the room. We now await the results from the shareholders voting online. The results are in. I declare the motion carried. That, ladies and gentlemen. Yes, sir. Yes, Mr. Staple.
Mr. Chair.
Yes, sir.
I would like to congratulate those directors who were re-elected, including myself, who have been with GraceKennedy for a long while and has helped in their development. I would like for you to be congratulated along with Miss all the other directors were re-elected. And I know Mr. Shirley will continue to do your good work. Because I know you from your little boy. And that is not today. And I know you're a hard worker and continue to work hard to see the growth of Port Authority and also GraceKennedy. Thank you very much, sir.
Thank you very much, Mr. Staple. And I know my two fellow directors, Dr. Mintakoy and Mrs. Phillips-Black, are working even harder, Mr. Staples. So thank you very much. I acknowledge those comments for them as well. Ladies and gentlemen, this concludes today's meeting. To everyone who attended our 24th annual general meeting, whether here or in person, thank you very much for participating. Thank you also to the hard-working GraceKennedy team and service providers, the Visual Tech Solutions team, who made today's meeting possible. I'd also like to thank and congratulate our Group CEO, Don Webby, for his outstanding leadership. And to recognize GraceKennedy's equally outstanding executive and senior management team, my fellow directors, and all our GraceKennedy team members across the world for their ongoing dedication and commitment to the company. Together, we remain focused on achieving GraceKennedy's vision of becoming the #1 Caribbean brand in the world by 2030. Whilst providing strong return to our shareholders and improving the quality of our team, customers, and communities we serve around the world. Thank you very much, ladies and gentlemen, for your continued support. Good afternoon.